Shares of Barrick Gold are higher this afternoon. The world's largest producer of the precious metal reported first quarter profit that beat analysts' estimates by a penny. And that follows Barrick's announcement this week that it will buy Australian copper producer Equinox Minerals. The CEO, Regent, joins us now by telephone from Barrick's headquarters in Toronto for an exclusive interview. So, thanks very much for joining us. You know, the earnings report comes out better than expected, but the questions that people are asking still have to do with the acquisition. So I'll just go ahead and shoot. Why is the company spending over $7 billion buying a copper company when pure gold miners trade at higher multiples than copper miners? I mean, why get into this business for that amount of money?
Well, first, this doesn't detract from our strategy on the gold side at all. We have a plan to grow our gold production over 9 million ounces. We have a deep pipeline of projects that we're continuing to advance. And the acquisition of Equinox doesn't change that at all. We're buying Equinox. It is an opportunity. It's a unique opportunity. It's rare when assets of this nature, this size, come on the market. It's a producing asset, so it's not a project that you have to wait 5 years to construct it and wait 5 years before it starts contributing to your company. And given the dynamics, we were able to enter into a negotiated transaction with the company.
But Aaron, let me push it a little bit more, because it is the most expensive takeover of a copper miner. I think it's 13.5 times EBITDA, according to our data. So it sounds like you must be, bullish on copper. Is it copper now a better bet than gold in your view?
Well, there's two questions there I'll answer. First is we're very, very optimistic on the gold price. You've seen the gold price spike up again today, and we think the factors that are driving gold will continue for some time. So we are very optimistic on gold, but we're also optimistic on copper. I think the fact is there is resource scarcity right now, and there's demand, particularly for copper, from emerging markets, and we think the industry is going to be challenged to mount a supply response. And so that's underpinning our thesis here. We think copper is going to be strong for a long period of time. And so when you take, I know the numbers you referred to, but if you take the company today, based on its current production, and they have a new mine that's coming on stream next year, the company will generate, at a $4 copper price, about $1 billion of EBITDA per year. And then with the ability to expand it by a further 250 million pounds within the next 4 to 5 years, you have a business that's going to generate $1.5 billion of EBITDA. So on that basis, we're buying it about 5 to 6 times EBITDA. So that works. We're using debt. As a result, it's very accretive to our earnings and cash flow. And this acquisition alone will add around 2 to 3 basis points to our overall return on equity. The first quarter, we generated a return on equity of 20%. This will add a further 2 to 3% to that. So it's a deal that I think is quite unique and creates a lot of value for us.
All right, Aaron, thanks so much for joining us. Unfortunately, it's all the time we have, but it was great to get at least a little bit of time with you. $1,529, by the way, $1,529.30 for a troy ounce of gold. So another record.